Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thank you for having me.
One of the best runs in stocks over a 6-day period, maybe in history. Bitcoin just still in the 95 range. What's going on in your mind? And there was data.
Yeah, no, equities have had a pretty tremendous run, and
Over the last week.
over the last week, past 2 weeks, really, and it's largely been a function of short covering some headlines around more optimistic scenarios for trade deals getting done, particularly with Asian counterparties, India, South Korea, Japan, maybe Vietnam. So there's a lot more optimism about a deal getting done, but in terms of the hard data that we've seen, it hasn't really been good. Like not that ADP is like that relevant, but ADP showed a slowdown in the U.S. labor market. I think it printed around 70,000 jobs gained versus estimates of like north of 160. So that was a pretty big miss. You also have things like oil trading really poorly and declining through $60 a barrel on WTI crude. Typically that's a barometer for growth. You had Chinese PMIs come in really soft overnight, and things like copper have come down. Generally, you've seen corporations guide pretty poorly for future quarters, a ton of which have removed guidance altogether. And so, the corporate earnings so far have been, I would say, less than stellar. But, the market doesn't really want to sell stocks right now. And, there's some month-end flows, some CTA buying potentially. Vol has come off a little bit. So there's some technical things in stocks that are causing them to rebound. But high level, I do think they are mispriced. The S&P is down 7.5% year to date, and we upended decades of global trade order in the past 100 days.
With a lot of remaining uncertainty there.
With a ton of remaining uncertainty, and corporate America is flashing yellow and spewing out warnings and stuff, and yet
Retracting guidance and things, yeah.
And yet, we're still pretty elevated. Especially in some of the high flying names that are definitely crowded, retail plays. But that's been a large part of this market. Retail in the U.S. has been trained to buy every dip for the past 17 years, right? Since the financial crisis, stocks have really only gone up and to the right, and every single U.S. equity investor has gotten paid to buy the dip. And in terms of flows data that we see from our various brokers, like retail has been buying. And so that's contributed to the strength in the market. But ultimately, I think the scenario that you have on a go forward over the next quarter or two is going to be filled with lots of bad stuff, to put it plainly, right? You are talking about shipping from China to the U.S. that's going to be down by a third.
I saw that graphic of them all anchored and not picking up cargo. Yeah.
Right. You were talking about tourism flatlining to the U.S., right? And that is what the aviation companies have been, or the airlines have been highlighting.
Is that because of the tariffs themselves, or is it because of like the reputational damage?
Anti-U.S. sentiment.
Yeah.
Right. And so, you're going to have a pretty big slowdown in U.S. tourism. You have 5 million student loan borrowers that have recently, technically defaulted.
Yep.
And yeah, it is a pretty concerning set of conditions. And now the question is, can equities look through all of that noise? I find that to be a very difficult question to answer, but I'm inclined to think that U.S. equities aren't really priced for a recession. And if you look at something like, predicted markets or Polymarket has, I think, the odds of a recession north of 65%.
Yeah.
Right. And historically, in recessions, earnings decline by a lot and equities decline by a lot. And I don't really think the stock market's priced for a recession.
But the likelihood is pretty decent.
And that's what the fixed income market is telling you, which I think is a more honest reading of the market, which, as we sit here, there's 100 basis points, essentially priced for the December 10th FOMC meeting, right? So between April 30th today and December 10th, you're talking about, 8 months or 7 months, and you're expected to cut 4 times by 25 basis points. Like, that's a lot.
Yeah.
Especially when like the hard data hasn't really turned. I think part of the optimism has to do with just the front running of tariffs that's happened, in terms of a lot of folks have pushed their activity forward to avoid some of the tariff stuff. But ultimately that will fade, right? The policies that the administration has pursued, right, are pretty aggressive on the tariff front, right? They have removed the de minimis exception, right? And so they are actually charging tariffs on small stuff now, and people can't, they've also increased their number of like customs agents and stuff, like they're monitoring and
So they're fully preparing. It's not like it's not all bluster. They're
no, they want tariff policy. And it's also like if you think about the baseline level of tariffs, like they're still pretty punitive, right? So if you're talking about at minimum 10% reciprocal tariffs and like higher than that for most places, like that's still pretty
that's a lot.
Yeah. Like that is a pretty large price hike on the consumer when the consumer doesn't look that healthy to me.
Speaking of which, the Amazon thing where they're posting the
price hikes,
the price impact of tariffs on specific items, so you can see the reason it's this expensive is because of like an additional $5 from tariffs or whatever. That was pretty interesting, striking. I know the White House pushed back on that.
I mean, it seemed like they were considering it, then they suddenly weren't. I don't know the exact details, but it is pretty clear to me that the U.S. consumer is going to have to pay more for cheap goods, and they're not really used to that.
Right.
Just anecdotally, like Temu has pulled all of its Google advertising.
Yeah, they don't want to even try to get U.S. consumers at the moment.
Because
they're not closing the store.
Because the goods that they traffic in mostly, like the prices are going to go up.
Yeah.
And so it's like,
right, they don't have anything to advertise. Normally what they're advertising is, wow,
cheap
you
Chinese
Googled
goods.
this thing and it's, $100 there, but it's only $25 here.
Yeah.
I mean, I guess part of the calculus obviously is if they are passed through, which I know the administration wants to counter or, suggest that's not a fair way to think about it, but it's historically what happens, then Americans are either more apt or even encouraged, incentivized to buy American goods since the foreign ones are more expensive. Maybe that brings them in. But the net effect is that it's just more money out of Americans' pockets.
Yeah, because it takes years to get your supply chains domestic, right? And it takes a lot of time to hire train workers.
We don't have the right workforce, especially for manufacturing, right? I mean, we've been telling our parents parents in general have been telling kids for decades to go to college.
Yeah.
So much so that they had 17 and 18-year-olds take out hundreds of thousands of dollars of debt to do it.
Yeah.
But if you want to be in the trades, which is what we need to build stuff, which, by the way, is great. Tradespeople make a lot of money. I mean, they make a lot of money. HVAC, yeah. But we just don't have that many of them.
We don't. And you know what the irony is? I remember going to college and attending my first computer science class, and the professor putting out there, like, what % of jobs are going to be comp sci related in the future and highlighting that. And now it's like, in the next year to 18 months, like almost 90% plus of coding will be done by AI.
Yeah.
And so there's a whole generation of folks
that's a good point.
Gone to school to learn, programming skills that are effectively going to be obsolete. Like in theory, that they probably are already obsolete.
Yeah, by ChatGPT and Gemini and Perplexity and all that stuff.
Correct.
Yeah.
And so, we're really going to have issues with repurposing our workforce.
It's not just the supply chain of materials that has to be redomesticated if this is long-term policy, but it's reorienting the entire labor market, which, we're talking now on the scale of people's lives. Like, that could take decades.
That could. But I mean, the AI stuff is definitely the most fascinating thing in the market right now. I mean, they have these robots that do surgeries now
I saw.
at better rates
Have
than
you seen the one
than
where
surgeons.
it's like doing origami and it's so
Precise,
fine? Oh
yeah.
my gosh, it's like the tiniest little piece of
No,
paper
I
and it's
mean-
doing it perfectly, and it's like it's one of these surgery
Right.
robots.
So surgery robot.
Yeah.
I bet you
Right. AI disintermediates high paying jobs.
a ton of high pay.
Yeah, not just
Like the AI is going to read X-rays and CAT scans and MRIs
I've seen
way
it
better than humans.
I've already
because
seen it.
The data set that they're trained on is millions of these scans.
Yeah.
Right. Like it's not some guy that's been doing it for 20 years. It's like 100,000 of him.
Yeah.
Right.
It's hard to compete with that.
And so I really don't think that folks in the economy are really prepared for what AI means.
Mm-hmm.
And the pace of change is insane. And there's the tech that we know about in the public sphere. And then there's the tech that is the true leading edge frontier stuff that isn't available to the public yet or even out there in public discourse.
Right.
And I bet you that stuff's even scarier.
Yeah, like for example, people talk about the O3 model in ChatGPT. It's really good with quantitative questions and puzzles and math and reasoning.
Yeah.
But then 4.0, the LLM model, is also really good. But like, what's like 2-3 stages past it is you got to think it's fully under development.
No, absolutely.
And what is that? What can that do?
So DeepSeek just released like a new math model, and it's 7 times better than the one they released like a few months ago.
Yeah.
Like
the pace, man.
Right?
Wow.
It is insane,
Yeah.
and so it's just really hard for the human brain, I think, to handle like that type of
well, we
stuff.
don't do well with log scale type of stuff, right?
Correct.
It's not really natural way of thinking.
Not intuitive.
Right.
But anyway, yeah, the labor market is concerning. And you have a non-farm payroll print on Friday that will kind of set the tone for stuff. I think if it's positive and it's good, it looks like we've got a good amount of jobs. I think people will look through it because what we care most is about the forward, right? And then on trade discussions, like you have to realize, one, especially with China, there's so many other things to negotiate, right? Like intellectual property, right? Like the things like that are going to take time. And Besson said it might take 2 to 3 years,
right,
to get a trade deal done. And don't forget, like Japan's largest trade partner is China. Fucking South Korea is right off of China.
It's connected to it.
It's connected, right?
Yeah.
Like so, these nations, right? They have to kind of like straddle both worlds.
Yeah.
And it's not clean.
It's not easy.
It's not easy.
Right.
And so, when the administration continues to talk about, trade deals that are a couple weeks out, a week, like that seems a little disingenuous because these things take time.
Yeah.
Right. And the most meaningful ones are the ones that are going to take a ton more time. Right. The EU is one of the U.S.'s largest trading partners. China is and the EU's trade person the other day said, like, we're not close.
Yeah, we're not rushing. I saw them say that. And I saw China say that they haven't had conversations. We've said they've had some. We're at that stage. We're not even having the big meetings yet with some of those big ones. Well,
and it's also hard to coordinate 17 different countries to meet with you and do trade deals that are nuanced and like have impacts to the tune of billions of dollars.
Yeah, so big bull market in trade representatives and customs officials. That's growing. Maybe we think about a second career if the crypto thing doesn't work out.
But lastly, crypto trade's fine.
Yeah,
I mean just Bitcoin mainly.
Yeah.
And I think ultimately where we're headed is back to easy monetary policy.
Yeah,
in
and
more ways than one.
Combined with a more fragmented geopolitical landscape, and I think we should do. We got to wrap now, but we should do on one of our next episodes a more fundamental and theoretical discussion about Bitcoin's role in a world like 2, 3, 5 years forward that's much more fragmented geopolitically, because I think it has a very interesting role to play there. And I think we haven't ever had that. I mean, it's been, a little bit post, but mostly Pax Americana the entire time Bitcoin has existed. So, and that seems like it's ending. Not that America is going to do badly, but that it's no longer going to be the sole top dog able to dictate terms and put the dollar wherever it wants. And so it'll be interesting to see how Bitcoin plays in that environment.
100%. Would love to do it.
Beimnet Abebe from Galaxy Trading, my friend, as always, thank you so much.
Thanks for having me.